welcome to another chart of the day from thetraderguy.com. And this is where I look at charts and just show the lessons that may be learned in them. It's kind of a random thing, and it's not always every day, but it's as often as possible that I look at a chart and I see something and think, hey, that's something the newer trader may not pick up on. And I try to analyze the chart, and it just gives you a feel for what I'm seeing in the marketplace. It isn't necessarily a place to come get signals or calls in the market. It's more like, hey, I opened up this chart. I thought this was interesting. There might be a lesson in this. Take a look, and eventually the idea is that you'll be able to open the charts and spend almost no time on them at all, because I spend very little time on charts, to be honest with you. So in front of you is the silver weekly continuation candlestick chart. This is the silver futures market, and it basically fills in the holes between the different expirations to kind of give you the idea of what it would look like as a continuously running contract. Because if you look at a lot of contracts, and especially on the weeklies, it'll be kind of filled here, and then it'll be real sparse until the point where you just get a couple dashes here and there. This essentially takes some older ones and makes average prices and such. So it's essentially the spot price is really what it is, for lack of a better term. Now, looking at this chart, you can see I have a moving average. This is weekly, so I put a 52 up there. And the reason I put a 52, of course, is there's 52 weeks in the year. There are a multitude of moving averages you could use. I just use this to give you an idea of what the average has been over the last year. Well, you can see the moving averages don't always work, but what I did find interesting here recently is that we did pop up over this yearly average. So in theory, the moving average people will want to be buying, not selling, because we're on top of it. And I should also preface this with saying that I've also looked at a 50. It's almost identical. 50 is a common number that people use, so it gets enough people out there paying attention that you might as well look at it, essentially, is what I'm getting at. So having said all of that, we've got that, and my thinking on the silver market had been this. 26 is obviously support. You can see several times it's been hammered, and I actually had that support down to 25. Quite often these large numbers will be about $1 thick or so. Just like in Forex on a weekly chart, you might have 1.25 to the 1.26 level. I know you guys have seen me say that quite a bit. This is essentially the same thing. So using that line of thinking, you can see that obviously there's support there, so it makes sense that the market would be interested in this area. Now, over the course of the summer, basically in this area here, we saw a drop, we saw some hammers before, we saw a drop, we saw some hammers again, there was a shooting star there, but it's basically all hammer-like candles, just showing that there was a lot of buildup at this area. I had gleaned from this idea that 30 was the level I wanted to see broken, and the reason being was the shooting star here. I figured it's a nice large round number, and if we got above the shooting star that had kept all these hammers down, then we're looking at some real strength. And lo and behold, I'm recording this on the weekend, so this would have been 2 weeks ago. We slammed right through it. Really, it wasn't a big deal at all to get through it. It was pretty amazing. So let me get all of this out of the way and start with another chart. So we already have support here, and all charts start with support and resistance. I don't care what kind of trading, what kind of system you want. If you're not using support and resistance, you're done. Now, people will refer to trend lines, people will refer to moving averages as dynamic, support and resistance, whatever, but nonetheless, you will have some type, and for me, it's horizontal is the most important. So we got past the 30, so that was the 30 level, and that was the reason for me to go long of this market. Now, I went long in an interesting way, so a way I've never done. I've actually bought physical silver, quite a bit of it actually, and I bought it again today. I bought it a couple days ago, and then I bought it again today. And I'm going to keep kind of stockpiling this. But anyways, when you draw this, what's interesting is you also get a possibility of a couple different trend lines. Now, some people will draw trend lines based upon, they'll write that off as that was a false breakout or whatever, and those people would have been long. Interestingly enough, I saw 28 as resistance, but I figured there was too much noise there. So let's go ahead and draw that again. So for me, I was kind of looking at it and I thought, well, where can we get more of an average trend line? Because the problem with trend lines is they're just like um, horizontal support and resistance in the sense that they can be zones, and a lot of people don't think of them that way. And then here you see this trend line coming down, and that connects pretty well. Got a little bit of a false breakout up here, and truthfully, you could probably draw this trend line something more to the effect of this. Maybe make it a certain amount of thickness wide, but nonetheless, it all says the same thing. We had been in a descending triangle, a pretty big one, really. And this was lining up for an absolute collapse in the silver markets. Well, now we are starting to break out to the upside. So, what does that mean? That means that we have a very bearish signal. And I probably should have drawn this more like this, maybe more like a kind of a funky triangle. But what that means is we have a very bearish signal that's giving way. One of the biggest mistakes that traders make is, let's just make this simple. Let's just say you had this chart up and you looked at this, and you used that and that and that, and this is a clean trend line. So really, I suppose if you really got down to brass tacks, you could make it like that, and we broke through the top of it. Well, let's just say you had that trend line, and it broke out. You were looking to short it, and it broke out, and you're like, well, hell, it's done. And I don't trust it because there's all this noise, blah, blah, blah. Well, nonsense. Really, you need to trust it because a broken signal is a very powerful signal. And in fact, the more obvious the broken signal is, the more powerful it is. Most of the time, many of you will look for these types of candles, these shooting stars, and you look for them to break down and you look to make this killing. The truth is, though, is when that shooting star gets broken to the upside, that in it of itself is a signal, and in fact, most of the time is a much stronger signal because you've got the entire market leaning in one direction and just got blown out. So something to think about. Another thing that was interesting about this chart is you could, again, I'm kind of fudging the wicks a little bit here, but you can see, let me draw that a little bit better. I'm fudging the wicks a little bit. Maybe just using the solid body, maybe, because some people won't include the wicks and trend lines. And you have to keep in mind, those people are out there too, and they do move the market just as you or anybody else does. So you have to look at the total perception. Maybe you make that a thick trend line or whatever. But they say the same thing. You had a downtrending channel that just got broken out of. So now you've got the support at 26.25, the downtrending channel that got broken out of, the downtrending triangle or the descending triangle that got broken out of, and we've skipped over the moving average. I cannot find, and I'm sure there is if I look long enough, but I can't really find a bearish signal in this. I really don't see the downside to this. And you've got to think about what's going on at the same time too. Now this is where fundamentals come in a little bit. And fundamentals are not my forte. I hate them actually because it assumes that the market will behave rationally at all times, and there's no way it will. But we have the central banks around the world flooding the market with liquidity. In other words, they're debasing their currency. The Australians are going to be next, from what I'm starting to see. So we got Australia, definitely Japan, definitely United States, definitely Europe, because Europe's definitely going to have to do something. The Bank of England claims they won't, and they may not, but there are enough major, those are enough major central banks to put a bid in on precious metals. So having said all of that, it makes sense that we're going higher. Sometimes the market actually does make sense. Now looking forward, of course, you'll have your usual, hey, let's look at if there's tops and bottoms, and there'll be something kind of centered around 35 there. And there'll be something centered probably right around 40, 45. It's like magic every $5, I guess, and on and on. But there are a lot of ways to try to figure out a target. And some people, and myself be included in this one, say, hey, that's our base of our triangle. And while you measure that to the downside, how far it's supposed to drop, which was basically $1 down to the $1 level, which was ridiculous. You can measure that as the move higher. So we have a $24 height. Well, from the breakout, we'll call that 21 or so. That's calling for a price of 65 an ounce. Now, a lot of people are going to say that's ridiculous, but 50 wasn't that long ago. And I will let you in on another thing that's fundamental that I really don't pay attention to very often, but I read some articles here recently and found it very interesting. Depending on who you talk to and depending on how they measure it, it does vary a little bit. The average gold to silver ratio is something like 14 times. In other words, if silver is $1, gold should be about 14 an ounce, right? Well, right now it's a little closer, like 44 or something. So one of them's either extremely overvalued, gold is, and I don't think that's the case. I don't see that happening. Or silver's extremely undervalued. I'm willing to bet on the latter, and as such, I bought, like I said, in my particular case, I bought the physicals because I plan on hanging on to these for a few years. Let's just say 65 is my target. $65 is what I'm aiming for per ounce. Um, I don't know when that is. That's the thing. I don't know how long it'll take. 65 an ounce could be 3 years from now, could be a decade from now, could be 3 months. Who knows? Um, but that's what the technicals tell me. Now, I can see all of these things lining up for silver quite nicely, and as such, um, really, you got to think something's going on here. You can also make a case for a trend line here. Now, if you go back far enough, it's a little cleaner, and it hits a couple times back there too. I'd actually forgotten about that. So that's another reason that we should be going up. So quite frankly, when you look at a chart and you really kind of delve into it, you can see there's a lot of signals going on at the same time. And I hope this at least gave you some things to think about when you look at the charts. And no matter what time frame you trade, let's say you're a silver trader and you day trade it. Doing this analysis on the weekly and seeing all of these things going, what does this tell you? This tells you only want to buy silver. You wait for buy signals on whatever your time frame is. Some people, trade on the 5 and 10 minute charts. I don't, but some people do. And now that they have this nice kind of confluence of several bullish signals at one time, you got to figure that's the way to play it. And hopefully, you guys, like I said, saw something in this that kind of rung a bell with you, and if not, just keep watching. I'll eventually put something out there that sparks something new in your head. Anyways, that was this one for September 3rd, and this is silver. Got any questions? Email me at chris@thetraderguy.com. Thank you.